You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you SPKEX volatility products. SPKEX options and futures are traded on the SPKEX Volatility Index, SPKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about SPKEX at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever compelling, at least we tend to think so around these parts, but hey, we're not biased at all, Options Insider Radio Network. Reminding you, of course, if you like what you hear, this show, anything else we do on the network, do keep rating and reviewing. You can rate and review wherever you want on your platform of choice, on this show, on the full network, on the App Store where you get our content. Wherever you get our content, keep rating and reviewing. It does help all the new folks continue to discover the content. And, of course, it's our final program here for our broadcast week for all you on-demand folks. If you don't want your week to end with Volatility Views, you want to get Options Oddities, you want to get great pro Q&As like the session we did earlier this week with Tony Saliba, you want to get live access to this and all the other shows that we do. You want, of course, put your name in the hat for the awesome pro trading crate giveaways that the Rock Lobster is so jealous of, and a whole bunch more. You know where to go to begin that journey to the dark side. Theoptionsinsider.com/pro is the place to go to learn more. Let's see who we've got joining us on the program today. I did besmirch him, so let's at least give him pride of place coming on the show. He is the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to Volatility Views, sir.
It is nice to be here, but I'm used to the besmirching. Your listeners are used to the besmirching, but that is why I am constantly riding the umbrage train, because that's just the way it is.
That's why the folks tune in. They like a good besmirching to start the show.
They do.
And also joining us from Maine adjacent today, holding down the MIAX hot seat from the other northern volatility mecca known as New Hampshire, we are joined once again by Mr. Matt Amberson, the founder over there at ORATS, a.k.a. Options Research and Technology Services. Mr. Matt, welcome back to Volatility Views, sir. It has been too long.
It has, and I think we all feel bad for Andrew, and because of that, I have made a major purchase, donation, ORATS hats, that have been so popular. So we're going to have to get Andrew a hat, and that'll help with
I'm not going to have to send one of those hats to Andrew now. There we go. Just to calm him down, talk him off the ledge from his besmirchment. Maybe I'll send him a sweet, sweet ORATS hat as we keep on rolling right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we do just that. We break down the week that was and indeed still is from a vol trading and trending and analysis and unusual activity, all sorts of fun perspectives. And coming into today's show, it's a bit of a surprising turnaround out there because most of the news in the after hours from an earnings perspective was pretty dire. Most of the big names popping off. Of course, we had Meta earlier this week, Amazon screwing the pooch last night as well. It didn't look that great, and yet the markets are just shrugging it off and then some. All the major indices up over 2% right now. The S&P up about 2.06%. The Dow up about 2.3%. NASDAQ closing in on 2.4% to the upside. So they are feeling their oats today, which, again, a little bit surprising given the fact that we had kind of a rough week on the earnings front. We'll get into all that earnings goodness in a little bit. Listeners, don't worry. There's a reason why Mr. Matt is joining us. It is that time of year, listeners. But before we get into that, let's run down all the madness going on out there. Like we said, a surprising green resurgence out there in the market today means most of our vol friends taking a bit of a hiatus today. Spikes down nearly 3 points when we kicked off the show, 27.5, down about 2 3/4 points from where it was this time last week. VIX cash, 26.25. Man, I could have used this level about a week ago. It's down 3 1/4 points from where it was this time last week. VVIX down to a 78. That's pretty anemic. Let me give you a frame of reference, listeners. It used to be in the pre-pandemic days, in the normal times, let's call them, when VVIX, the vol of vol, got down to about a 75. You knew it probably wasn't going to hang out there for very long. It probably was going to rebound north of that pretty soon. That was kind of the practical lower end floor for the vol of vol. Now, obviously, theoretically, it can get lower, but practically what we would usually see is it gets down to about the mid-70s. It would usually bounce from there. So now we're in this post-pandemic era. Who knows what the new normal is? But 78 in this environment, it's pretty low for vol of vol. I'm just throwing it out there. Down 8 points from where it was this time last week. Not to be outdone, our other friend on the vol of vol front, the VSPKES, a.k.a. the Viking, down to about a 97. That's down 8 points as well. So both VVIX and VSPKES moving in lockstep this week. If you're wondering, the low for VSPKES was 89.5. That was back on July 29th. So we are within spitting distance of the all-time low for VSPKES as well. So that's a heck of a lot of vol just evaporating from the marketplace over the course of the past week. So a lot to unpack. Let's go out to the MIAX hot seat first. Mr. Matt, sir, what is lighting up your tape in a somewhat surprising vol week, sir?
Yeah, I mean, Meta let us down, and Kramer got on there and had a tear and apologized. I mean, I think that's what we should be doing if you come in last place in the VIX picking. We should come in,
tearful apologies. There you go.
Have an emotional apology for your VIX pick. So it was interesting to see that. I went a little bullish earlier. We have our trading club and at ORATS, as you well know. Everything looks good except for contango. So the implied volatility I look at, that has broken down from the uptrend that started way back in mid-August. So finally broke that about a week ago. These forward relationships, those broke to the upside. So everything was looking good. But contango, I said, what is going on with contango? Well, what's going on with contango is this election coming up. The midterms are popping into the monthly expirations. What is it? The 8th is the midterm. So the 9th, the expirations on the 9th have higher vol. We have this method for estimating what the move is going to be on that. We use it for earnings, but we also could use it for events. So it was 2.9, now it's 2.4. So 2.4% is the estimated move on the midterms. But it just seems like this market wants to go higher, wants to shrug off everything, earnings, wants to shrug off what's going on in Ukraine. Who cares about nuclear weapons? Who cares about bad earnings? Let's rally this thing is what it feels like. Vol's coming down. It looks like my predictions before were we're in a bear market, but it's a wide, slow moving bear market with these interest rates up. I think VIX will stay higher than normal, not just because of the midterms, but because of the interest rate vol is still very high. Is it going to be a 0.75, 1.25 raise in November? What's going to happen in December? Are they going to talk pivot? There's a lot of questions out there, so we're going to have a higher than normal VIX at least. But I think overall, as I've mentioned before, when you're raising interest rates this quickly, it's going to cut into earnings. Not immediately, but it usually takes 10 to 14 months, so a year, and it starts to hurt earnings. So we're going to have earnings per share come down. I think from 211 for the S&P. Probably come down 5 to 10%. So that's where my predictions of like 3,000. So it could hit 4,000, but I think it's going to hit 3,000 before 5,000. So that's what I'm seeing out there. I know it's a lot, Mark, but there's a lot going on.
There is a lot going on. And you're right. Who cares about crappy earnings, the potential for looming conflicts overseas? Who cares about any of that, Matt? We got to buy them stocks, right? Get in while the getting is good out there. Yeah, massive rush to the upside out there. Who's always reliable to throw a dose of cold water on some irrational exuberance? It's the rock lobster himself. You could argue today might be a suitable day for such things. Mr. Rock Lobster, what cold water you got in store for us today?
Well, I am watching the cold water run in currently, and it does look chilly. It's amazing what a month will do. A month ago, late September, it was still, it wasn't you could still jump in, but now it's a little frosty. I agree with Matt on the contango. You have two events. You have the November 2nd, the Fed speaks, and on November 11th, the election comes. And if you're looking at polling, which I don't think anybody believes anymore. It's actually hard to believe just about anything on the news anymore. I don't care who says it. I don't believe anything anymore at all. Because they just come back 6 months later and said, "Hey, well, maybe we were wrong." But besides that grumpy piece of cold water there, my guess would be that we would have a little bit more of a divided Congress. Historically, a divided Congress, as long as I've been doing this, is generally better for stocks because politicians can do less. So anytime they can do less, because we saw what happened in the last 2 years when they did more. They did poorly when we kind of gave them let's say they took the gauntlet and ran with it, and they did not run in a very good direction, mostly in circles. And at this point, I would guess that we would end up with some kind of divided Congress. Who knows who wins? And to be honest, I have a hard time caring really at this point. But as long as one party is arguing with the other, we all seem to be better off. And that would slow down, my guess. Spending would slow down. All these other things would slow down. What I do find is that interest rates are going up, and mortgages are 7%. And we managed to have a pretty good housing crisis when interest rates were 7% the last time. Or we had a great financial crisis, right? So I think banks are a little smarter on how they lend. I think the biggest problem is, what's the world going to do with all the zero rate paper that they own that is not going to produce any returns for the next gajillion years, like pension funds and stuff like that. But somehow that is as bad as that, was. Apparently, it's somehow calmed down. And I think a divided Congress would put some sort of a brake on the fiscal exuberance of the current member of the White House. Not that the former did a whole lot better, by the way, or the one before that, to be quite honest. So I think the only thing that'll stop spending in Congress is the fact that they're going to pay $750 billion a year in interest payments. That's a pretty big number. I think when I was a youth, I remember the whole budget was only somewhere around there. And now it's just the interest on the debt. So I think that might put a natural brake on the ridiculous amount of spending over the last 10 years. And the Fed is still up to QT from what I can see. So will things slow down a little? Probably. Will we stop seeing the 4% up moves in SPX? Until the Fed is kind of out of the picture, I'm not taking anything off the table from that view. But I agree with Matt. The contango in the curve is still, there's two big events coming, and we still have a relatively high realized vol in the market. I think the 30-day average is like 25 or 26%, which is pretty high close to close. This year, from a realized vol point of view, is, except for the great financial crisis, and we'll just call it the very short period of the COVID. I think this is I would like to hear Dr. VIX. I know Matt has statistics, but I'm gonna guess this is, in the last 20 years, besides the great financial crisis year, might be the highest realized vol for this long, would be my guess. If it's not number 2, it's number 3. Because I'm looking at some of the numbers here, and it's pretty darn high. So let's see here. We're coming in. 60-day vol is 24%. That's zone 4 for a month, for 2 months on average. So we've stayed in the highest quartile of vol for 2 straight months on average, which is hugely, hugely, hugely high. And I agree with Matt. Is there anything that's going to make that go away? And usually from a vol point of view, you were trading in a pit. The only way you take vol down is when something changes. When you can say, hey, we're going to be less volatile than we were before. And I have to say, I can't see that. The only thing that would help that to some degree, again, I'd say divided Congress, number 1. That might be less aid to Ukraine, maybe, which might get that war thing over at some point. Putin could die. Sorry, I don't wish anybody to die, but, it really hasn't helped matters. So something could happen, right, that would slow the vol down. The only other thing that could slow volatility down is the fact that we have higher rates, and they're going to be here for a while. I don't think anybody doubts that rates are going to stay up here because they need to be. The governments can't keep borrowing forever. It did generate inflation. People will argue about how much it generated, how much is due to government spending. My guess is a big chunk of it. And it just finally caught up. Right? Economics, I believe, is an imperfect science. So you can have the theory, but the reality takes a while sometimes to sort of work its way into the system. So I think that's what we have. We have VIX trading at around a 26, and it's hugely fair. It might even be cheap, to be quite honest. So would I expect us to have substantially less vol after the midterms? I'm not going to say substantially, but unless something really, I would say at this point, we have another shoe to drop, something that's terrible, awful, whatever. we've probably seen the bottom in stock prices short term. I would expect volatility start to moderate somewhat, but it's still 2022, so there's no guarantees. Until it's 2023, I'm going to say we could stay in a zone 4 realized vol until the end of the year, and that would be and that would not surprise me in the least.
Let's get on out to some of our other vol metrics. And you know what? It is that time of year, listeners. I mentioned at the top of the show. We are in it. It's nice to have single names buffeting the market again, as opposed to the sometimes ridiculous macro trends that can move this market hither and yon, seemingly on a whim, even though you can maybe argue that that's what's going on out there today as well. But luckily, we got the guy who crunches all the numbers for us over there at ORATS, the keeper of the earnings data. And man, it's another banger week out here, listeners, for earnings volatility. Just give you a flavor of what was popping off this week. We had on Tuesday, we had GM, Coke, GE, 3M, Microsoft, Alphabet, Visa, Chipotle, and Spotify. Wednesday, we had Boeing, so our friends across the street until they move, Kraft Heinz, Harley, Ford, O'Reilly Auto Parts yesterday, Mickey D's, Caterpillar, Amazon really kind of screwing the pooch, but apparently the market doesn't care. Apple, Merck, Intel, T-Mobile, Southwest Airlines. Today we had Exxon, Chevron just blowing the doors off of it. Record profits today, so that obviously helping the market a bit. But who's surprised by record profits in the oil companies right now? Either way, weird stuff afoot. Luckily, we got Mr. Matt to parse it for us. Mr. Matt, crazy start to the season. We had Meta just getting annihilated earlier this week off pretty terrible outlook. But we also had some other big names popping off. We have a crazy season. As I'm looking at the numbers right now, Mr. Matt, and these are obviously very early numbers. They will change. But the earnings season report also hanging out at a comparatively insane 150%. Week 2 right now hanging out at 208%. I've never seen a week that crazy. Granted, only 87 names reporting, but still a lot of madness at play here, Mr. Matt. Make some sense of it for us.
Yeah, it's a pretty crazy earnings season. If you take out that week 2, week 3 we're already at 116%. That meaning straddle owners are up 16% on their straddles around earnings. So that's already a pretty good one. And with Meta coming out with their huge move, they were 10th that day. There were 10 other names that moved more than Meta, and some decent names there. So there are it's happening to a lot of firms. They're moving much more than expected. We did predict this, Mark. We especially with interest rates changing. We were talking maybe even back in August about how any outlook, any small change in current earnings, that was going to be a canary in a coal mine for what I think is coming up, which is going to be much worse earnings. But they're trying to read the tea leaves right now, and it's showing. They're pushing these stocks all over the place. As we create that earnings season report. That's much higher. We create these every day. We come out with the results, and that's where we sort these results with Meta and even Shopify with big moves. Apple, even though it didn't go down, it went up, but it went up in a big way, much bigger than expected. And of course, you mentioned Amazon. Amazon was down, quite a bit more, 35% more than expected. So those traders probably made something like 35%. So that's these are some big names making some big moves. Again, I think that the vol isn't being really respected, meaning they're not, the actual vols aren't keeping up with the actual moves, and so I still think people are not really into this, how different it's going to be. I think with new interest rate regime, and starting to see these bigger firms move. What we see in the earnings season is that week 1's usually a dud, week 2 is a little more, week 3 is more. Still, week 4 is the most, meaning movement versus expectations. I shudder to think what's going to happen next week, Mark. I think we're going to have some pretty big movement, stay tuned. Get your seatbelt on, and wow, it's going to be a big one next week, Mark.
Yeah, I've often joked the market just doesn't like it when Apple is red. It struggles mightily to push it green, and man, they are pushing it green today, up over 12 handles right now, 8 1/3%, closing in on 157. It touched 157 briefly this morning, has retreated off it a little bit now. This is its best day since the massive rallies in the early days of the pandemic back in 2020. So just insane rally for Apple, which the initial blush after the earnings, it wasn't that great. So it was kind of interesting to see how the turnaround. Of course, that's what happens with earnings all the time. People struggle to digest it. I remember it well in the early days out there trading in Intel, watching the stock whip all over the place in the after hours as soon as the announcement was made, as people struggled to digest the numbers. Of course, our friend Amazon, it's not enough to lift Amazon out of their doldrums. They're still off pretty much 8 1/4%, even though they have rallied a little bit off their lows of 97 2/3 this morning. They're trading 101 and about 101.90 now. So they have bounced off that. But this massive uptrend, not enough to reverse the fortunes for Amazon. Interesting time now. We have Meta and Amazon both screwing the pooch, and now both hanging out at pretty much $100. 101 for Amazon, 99 for Meta. Which would you rather have right now, listeners? Amazon or Meta going forward? Maybe that might be an interesting question of the week. We'll have to mull that over. Maybe we'll put that to you folks out there next week as we get on into the vol space a little more. Well, Matt mentioned the contango out there. That's something to keep an eye on. Obviously, the vol surface coming crashing back to earth yet again this week. When we kicked off the show, we had that front no future down over 3 handles from where it was last week, down about 3.3 points. Man, Mr. Rock Lobster, this would have looked really good for me last week. These down 2.7 points, so they are crushing that front end of that term structure. Once again, you cannot find anything all the way out to June. There's nothing over 30 left on the term structure, listeners. The highest we get is about a 28.45. That's out in April of next year. So intriguing stuff afoot. Hey, Mr. Rock Lobster, are you enjoying that downside leg of your strangle that I mocked for you last week? Because it seems like it's working out now. And then B, what else is lighting up your tape out there in the vol surface this week?
Yeah, like I said, I closed some puts yesterday, which I'm regretting a little bit, of course, because hindsight's 20/20. But the puts I do own, I'm enjoying today still. The real question is how much below I think 25 we can go, and I think we would have to take. It would be a. It would have to be. We need something to change where people are kind of on board. I think the thing that would make that us to have lower vols, like the Fed's like, okay, we have our rate rises, but we don't see the need to be more aggressive, some kind of verbiage like that. I think that would help in the short term. The lowest we got for vol in the last 3 months, I believe, was around 19.5. And that was when, remember, we thought inflation was licked. We licked it. We kicked its butt, right? And the market was betting pretty heavily. I think we were, 4,200 SPX. Hey, it was all good again. So now we are on our way to trying to get to that point again. Now we're not close. We're around 3,900 SPX, but we were 3,500, 2 Thursdays ago. So, don't blink in this market. So as far as vol surface and term structure, we kind of covered that before. We have a normal contango. Anytime I see contango, I expect the market is looking for lower vol in the short term, and the only thing holding it up, I believe, is the is the Fed talking on November 2nd, and even that vol has come in a little bit. I was pretty surprised because the straddle for the November 11th cycle and SPY was like $20. And now we're trading, we're getting close to right around 390. And that straddle is $17. So we have lost about $17. We have lost a little straddle juice. Volatility actually did drop per strike. So if I look at the NOV 11, because that would hold the election and what the Fed was saying. And if I look at the vol on that strike on the 390s, it's running even, right? It was 27.85 yesterday. It's 27.99 today. So vol on the weekly cycle. So this is what, I teach my students. You have to be careful on what vol you look at. So the volatility that's right around these two events is holding relatively stable. As we move up, the SPX, VIX, the index itself goes lower because of how VIX is calculated. And some of those vols are now dropping 30 days and out. But the vols in the I would say the 9-day VIX area are holding about even, and the 1 week volatility is holding about even. So, a little bit of air has come out of the balloon, but it's not like those vols have just disintegrated and disappeared yet. So I think that's what you have. You kind of have, it's almost like a big earnings cycle, but the earnings is what the Fed's going to say in the election, and the SPX is the underlying. So that does happen a lot with these big, because now these macro events have just taken things over. But there we go. I was looking good on the crystal ball at the beginning of this morning, but now I no longer look good. Dang.
Yeah, you were threatening.
Closer than Longo, that's all that counts.
You were threatening a rare double bullseye, which is very rare in the history of the show. So you were encroaching upon such rarefied air. And thankfully, the Vol gods have sought fit to not bestow that upon you. But you know what? The show is still young. We shall see. Maybe a rally back to my level is in order. We shall find out. Let's get on out to, before we do that, Mr. Matt, sir. Obviously, you've been keeping an eye out there on the Vol surface. You mentioned the contango and the evolution therein is something you watch very closely in your models. What is catching your eye out there in the Vol surface this week, sir?
Yeah, I just think it's strange, and maybe Andrew could help me out on this. But there's actually backwardation in the SPY SPX, for around the election and during these earnings, and then it comes down and then it kind of flattens out. Whereas the VIX term structure is in contango, pretty strong contango. I don't know. I mean, I guess I don't get that so much. Andrew, do you have anything for me on that?
You mean I think you mean you're looking at SPX like weekly contango, like the day, like weeklies and dailies?
Yeah, what I'm seeing in even the Nova 11th or whatever is 28 IV, and then it goes down to 24 in regular Nova at the end of Nova or beginning of D. So it's backwardation there, but no backwardation at all in the VIX term structure. I just think that's strange.
Well, I think it's where all the forward vols start to catch up. So you got like forward vols. So where VIX is measuring, the future is measuring where it is relative to VIX expiration. So I think the thing with why things look weird is where everything's expiring relative. When you do all the math on forward vol. So it just depends what part of the curve you're looking at. So if you look at regular VIX, you still have, the higher the back month vol. I got to make sure I get all my stuff straight. As you raise the vol in the front, the forward vols look lower when you look at those terms. So you're just kind of catching the front part of the term with that type of volatility, and then everything's going back to the normal contango you get your normal contango because those vols are now, the terms that they're picking up, the short-term vols are a little lower than back-term vols. So it's just where on the curve you're actually, it's like where the bulge in volatility is relative to all the different times.
Right.
So it makes sense when you stick it all out on a spreadsheet and look at it.
Yeah, and if there were and it is a little flatter. The NOV-DC is a little bit flatter than you might expect given the rest of the shape. But all right, I get it.
All right, out to the land of the spikes options we go. And like we said, a lot of the crazy in the money paper, and I use crazy in air quotes, listeners, rolled off the board with October expiration. Still have some on the board waiting for new players to come in and do their deep in the money puts and or calls. Right now, the top, let's just do a top three here, really. We got the DC 10 calls for number 3, because there you go. Number 2, we've got the NOV 160 puts, so back to the deep in the money puts. And the number 1 position in spikes options right now are the NOV 12 calls. So when we're talking about the sizable remnant positions out there, it still is in the money, but there's not as many. Obviously, before in October, there were 170 puts and 180 puts and all sorts of fun therein. So it'll be interesting to see what new positions populated as we continue to roll forward. Getting on out to the land of the VIX options. Kind of a light day and a fairly anemic week, all things considered, out there on the VIX options front. Only 185,000 contracts on the tape right now. So these are back to the kinds of numbers we used to see back in June and July in the quiet period of the summer. Right now, the ADV also reflecting that. ADV back down below 600,000, 598,000, down 64,000 contracts from this time last week. So vol coming in and volume on VIX front there. Just overall VIX volume coming crashing in as well. Let's get on out to the top positions, see what's dominating things out there in VIX options. Cost you 135,000 contracts right now to break into the top 10. That gets you to the D60s. By the way, it is 10-0 calls over puts in the top 10 in VIX right now. Read into that what you will, listeners. Number 9, $1.55 of the of the February 80s. So we're back to these strikes, listeners. Number 8, $1.57 of the D70s. Number 7, $1.69 of the NOV 40s. Number 6, $1.76 of the NOV 35 calls. And that's pretty much it for quote-unquote reasonable strikes here, listeners. Number 5, 203,000 of the March 75s. Number 4, 224 of the Jan 70s. Number 3, 230,000 of the NOV 70s. Number 2, 289,000 of the NOV 60s. And rounding out the top spots in VIX options yet again, 309,000 of the NOV 50 calls. In terms of action this week, like we said, kind of an anemic week. The lone really standout was yesterday. Today, like we said, kind of a whole lot of nothing hitting the tape today. 185,000 contracts on the tape right now. The top trades, such as they are, 13,000 of the NOV 65s, almost 11,000 of the NOV 40s for number 2, 10,000 for number 3 of the NOV 37 halves, number 4, 8,000 of the DC 38s, and rounding out the top 5 today, about 8,000 of the NOV 27 puts. Yesterday was the standout so far this week, 604,000 contracts on the tape. The big dog yesterday, 57,000 of the NOV 37 half calls. That's nice. At least they're somewhat reasonable. It's not NOV 80s or something like that. Number 2, 47,000 of the NOV 40s. Number 3, 45,000 of the DC 35s. Number 4, 30,000 of the NOV 35s. And before you start saying, well, at least the mostly somewhat relevant calls, then we got number 5, 26,000 of the NOV 50s. And even the 50s aren't as optimistic, shall we say, as a lot of the other strikes we've seen of late. Wednesday, 522,000 contracts on the tape. The big dog on Wednesday, about 29,000 of the NOV 70s, as followed by number 2, 27,000 of the NOV 50s. Number 3, 22,000 of the NOV 23 puts. Number 4, 20,000 of the February 17 puts. And rounding out the top 5 on Wednesday, 19,000 of the NOV 35 calls. Tuesday, a similar amount of paper, 520,000 contracts on the tape. The big dog on Tuesday, 37,000 of the NOV 65s, followed by number 2, about 35,000 of the NOV 25 puts. So maybe a bit of a risk reversal out there. We'll have to dig in and see. Number 3, 26,000 of the NOV 85 calls. Number 4, 21,000 of the NOV 60s. And rounding out the top 5 on Tuesday, 21,000 of the Nove 70 calls. And then Monday, another anemic day, 315,000 contracts on the tape. But the big dog on Monday, 31,000 of the Nove 40s, followed by number 2, 18,000 of the Nove 35s. Number 3, 17,000 of the Nove 60s. Number 4, 14,000 of the Nove 30s. And rounding out the top 5 on a pretty light day, 13,000 of the D's 25 puts. Mr. Rock Lobster, not the most rock'em sock'em robots of weeks out there on the VIX options front. Any paper coming across your radar or catching your eye this week, sir?
Well, I mean, the favorite paper of the week was still the June 15 puts in VIX, or the June 16 puts. I think I thought, at least myself, I didn't think VIX could go down a whole lot go down a whole bunch this week, given the fact that we do have this move coming from the Fed, and we do have the election. So we've rallied far enough to drive VIX lower. But I'm surprised that we had, the 20, the move from, let's say, 29.30 at the beginning of the week to here. And again, because we rallied, right? 3,700 to almost 3,900 this week. So, when we rally, VIX goes down. Now, volatility at the strike hasn't gone down very much. So, I mean, I think it's not an unreasonable bet that we get back to what I would call a normal vol regime by June of this year. There is 100,000 open on those June 15 puts. You can buy you want for 8 cents. Nobody believes we could get, it's hard to believe that no one sees that vol could get back to like zone 2, which is just half a quartile, half of where VIX has lived much of its life. And the 22 puts are $1.48, 21 puts are $1.09. So there's not, again, you're waiting a long time for those to pay. Don't get me wrong. It's not like VIX goes to 22 on Tuesday and those options explode in value. But the fact that kind of paper, there is some dibbling and dabbling, and where those 8-cent contracts could be worth $1, right? Could easily be worth $1 by June of next year, and that would be a pretty what I would call a lower risk way to be short volatility for that long period of time. So I think that's the volume I saw there. Another thing is what I would say still is in the Nove cycle for this year, the lack of interest and how low the vol is from like the 26 to the 20 put side. Like the 20 puts are 4 cents. Like they're given no chance basically for vol to go to 20. And believe me, we would have to change again. Like I said, we'd have to change regime. But there's 3,000 to 22 puts traded. The 24 puts are 56 cents, 3,800. Very low volume for how and VIX is a game of when vol can make that move. So it's pretty low volume I see for how close VIX is at this point. And I think. And that's the problem with what we've had lately is every time we kind of get to this level, like Matt was saying, we have this, the vol just jumps right back up again because, whatever a problem rears its ugly head. So there isn't that huge demand for those contracts like we have seen in the past. But still, like, the Nove 26 strangle for a little more than $3, I find I find that well priced. Probably, I would guess it's probably a little inexpensive. The 28.26 for $2.80. Like it's hard to believe VIX is still relatively high, but normal for this year, kind of average for this year. And those strangles are only like $2.50 or $2.60. It's just, the vol is unbelievably low. For what we're seeing. So I'll say that's you're not seeing that crazy buy demand for VIX, which usually we don't usually means we don't crash. But that's the observation. I mean, I'd be interested to hear what Matt has, because I know he's a volume follower on all this stuff.
Volume follower indeed. Speaking of followers, you really love my June 15 puts for 7 cents. They inspired you, sir. The heck with that 8-cent kind. 7 cents is where the action is, Mr. Rock Lobster. Out there. I know, Mr. Matt, you don't really watch a ton of the VIX options out there, but there are some intriguing developments going on in the world of vol ETPs. Let's start with our newest additions. Good old SPKX and spiky. SPKX, of course, the plain vanilla, if you will, version. No leverage there at about a 27.25 when we kicked off the show, down about 3.25 points. Still waiting to kind of light the world on fire out there. It's got about a one lot open out there on the option front, but the options did just list a few weeks ago. Spiky, though, getting a little bit more attention, a little bit more paper out there. Spiky at about 27.75 right now, down about 5.25 points on the week. Obviously, Spiky is the levered 1.5 contract out there, and doing some numbers, including looks like a 9 lot going up today of the Nove 56 calls. So some folks liking some 50s. Looks like they're overriding them, though. Again, we're at a 27.75, so it's a fair out of the money call. But then again, in these spikes products, we have learned people do like their far out of the money contracts. And then getting onto some of the other recent additions out there, levered, inverse, and the like. Let's start with inverse with SVIX. It was at about a 12 when we kicked off the show. It's up about 1.2 points. Let's see where it's hanging out right now. That's still at about a 12, so not a heck of a lot of evolution out there throughout the course of the show. In terms of paper, like we've been saying for a while, it seems like these vol products, these vol ETPs really do a lot of paper on the weekly expiration cycle, and that's usually the case. SVIX today, though, kind of quiet. Only 335 contracts on the tape. The ADV hanging out at around 850, so not a lot of paper out there. Let's see if its friend UVIX can buck the trend out there. UVIX was at about a 990 when we kicked off the show, down nearly 2.5 points, and it's still hanging out at about a 990 out there. In terms of paper, UVIX, the levered 1.5 contract, listeners, has attracted a lot more in the way of options paper. That's reflected in the ADV. It's nearly 6,000 contracts, even though it's down about 600 again this week. And once again, we are seeing a decent amount of paper here on the Friday as the expiration cycle just drives some action. We're already seeing over 5,000 contracts on the tape in UVIX right now. Let's see really quickly what's lighting it up out there today. We have 1,000 of the October expiring today. So then the weeklies, 10 half puts going up. And that's the big print, followed by about 500 of the 10 puts also going out today. And then we go out. It's all October expiring today. Like I said, weekly expiration listeners, 300 of the 12 half puts and about 300 as well of the 11 puts. So that's a fair amount of your paper out there is all stuff going out today. In terms of the size positions that are open in UVIX right now, that remains on the DEIS front. 2,000 of the DEIS 18 puts is your number one position out there, followed by 1,500 for number two of the October 11 puts expiring today. So those obviously going the way of the dodo, looking pretty good right now. Number three, we've got the 10 half puts also going out today. 1,500 of those are open. Number four, 1,300 of the DEIS 11 puts, and number five, 1,100 as well of the DEIS 30 calls. So interesting, got both extremes there, 11 puts and the 30 calls out there. Mr. Matt, we've had a lot of new additions to the vol ETP realm over the course of this past year, including good old SPKX and spiky. Have you paid attention to any of these? Any of these coming on your radar over there at ORATs these days, sir?
Not much, but you know how I like my super far out of the money options, and they've been holding it. They've been holding pretty well out there. So I'm liking these big volumes going in those way out of the money calls. But I think I have a few of my clients are, I go visit them and they almost whisper about some of these contrived ETPs and such. And they're making money on it somehow. They just read the prospectus and they figure things out. And I just don't want to play in that when I think I have a relative disadvantage. So that's how I feel about those, Mark.
You should put out your own index there. What do you think? The garbage calls and garbage puts index. What do you think? That'd be kind of interesting.
I like that. Like, they do hold up. And again, it doesn't have to go there. It just has to, the vol just has to shock a little bit, and then you'll be surprised how much those move.
Your garbage VIX calls index and your garbage SPY puts. I think people would be into that. That'd be kind of fun. There you go. I'm giving you more homework. You're going to regret coming on the show soon. Let's keep on rolling here. We are kind of coming up against it. UVXY really quickly at about a 10 when we kicked off the show, down nearly 2 points, about 1.8 points. In terms of action, it had done about 157,000 contracts at the start of the show, so a decent amount of paper. Let's see if more has flocked in since then. It's up to about 210,000 contracts, so it's pretty close to the ADV already, which is 237,000 contracts. That has come in substantially since our last show. It's down about 40,000 contracts. In terms of the size positions out there in UVXY right now, it's the 11 calls going out today. I said we're at about a 10, so those may not have a good shot. 23,500 of those. Again, if you're overriding them, okay, but as we've seen in the past, a lot of premium buying out here. Number 2, we have 19,000 of the Jan 75s. Number 3, 16,000 of the October, again, expiring today, 12 puts. Those are looking better right now. Number 4, 16,000 of the no 15 calls, and rounding out the top 5 in positions out there in UVXY, 15,400 of the October expiring today, 13 calls. Mr. Rock Lobster, anything catching your eye in the topsy-turvy world of volatility ETPs this week, sir?
I mean, I think UVXY moved a little bit this week. That was that's kind of the first thing. It's back to $10. So the glory days of the UVXY split are just around the corner when it's a little more fun to trade, but it's closing on, the lows of the year. I think we're about $8 for UVXY. So I think it does make maybe a potentially interesting trade for how low UVXY could go till the November cycle, right? So right before Thanksgiving, after the election, after that. So again, it is setting up for a vol cycle with really low vol of vol. The vol of vol in UVXY, I'm noticing also, is about as low as I can remember it. I'm trying to get I believe we are at lows of the year. So normally, when we are looking at volatility in a volatility product, and we are in the top quartile of volatility, the last thing you would expect would be that the volatility of the options would be the low of the year. And it is far and away the lowest of the year. If you look at a chart of vol, it is at zero, making new lows everywhere. So all of those things, when I see them, you want to be contrarian, right? And say, hey, I definitely want to, buy that vol, which I totally get, or, that's got to be the bottom and things are going to turn around. Certainly could happen. But again, I would say that those low vols are not indicative of, a market for volatility wanting to go back up. Now, every time vol is low, it goes back up at some point, right? So just so everybody knows that. But the fact that it's making such an aggressive low before this big event, it has me shaking my head a little bit. So I think, of course, you want to own it. You kind of want to own strangles and stuff like that, because the fact that we could see like a 20 volatility, it's possible. I'm not going to say it happens, but with vol so low, you can still catch that ride and own upside and, make some decent money on that as a trade. So it's just the opportunities here. You don't really get such a low number into an expected event. So the funkiness of the pricing, again, it's reflecting what's going on. And it's possibly being reflected in, again, the liquidity provider doesn't feel the need to keep the bid up. So as Matt remembers and as you remember, you're going to keep the bid for vol up there until somebody starts selling it back to you. So somebody somewhere is selling something to the liquidity provider to push all these vol contracts in the short term so low. Don't know who it is, but it has to be some kind of substantial dough knocking the vol down.
Let's see if we can keep knocking that vol down as we head on into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the portion of the show where we get dangerous here, try to predict what the vol gods hold in store. Last week, I was at about 30 1/4, just north of the 30 handle. Obviously, we're not hanging out there. Mr. Rock Lobster was feeling a 27 1/4, and the VIX gods are fickle. VIX coming in about a 26.10 right now. I will say, if you have a shining light in your favor, Mr. Rock Lobster, it is the extra bit of juice in SPY from the dividend that keeps spikes a little bit elevated this time of year, sir, because spikes is closing in on a 27.40. So you're still outside of our 10th of a point frame of reference, but you're closer on spikes. So I will give it to you there. But alas, no double bullseye for the Rock Lops. Even though close, again, thank the dividend gods, sir, for keeping you within striking distance this week. Looking at our listeners really quickly, looks like our closest we had a bunch of people with 30 handles this week. Yeah, I was feeling that too, so I can't fault you. It looks like the closest was Z2313. That's a mouthful. Great handle. I like it. It rolls off the tongue. 2829. So again, unfortunately, outside of our 10th of a point there as well. I'm looking really quickly. Yeah, I don't see anything else. 29.5. Frank was the only other one that was even below 30 at 29.5. So yeah, if our producers find any others and all the people who sent in their guesses, they'll hit me up and let me know. But for now, I don't see any. That means we have a clear slate. That means Mr. Matt, as our guest, you did last time you were on, I do believe you had a bullseye, so you are still basking in that reflected glow. So I will allow you the dubious honor of going first, sir. What are you feeling for this time next week from a vol perspective?
I'm going to get pretty aggressive. I think vol's coming in. I'm going to go 24.98.
Oh, interesting. Another strike that would have looked good for me, like, let's say, a week ago or two. Let's go out to Mr. Andrew. Since you were closer than me this week, I'll let you choose. You want to go next or last?
I will go next to give you a chance to scum me, but I will still win.
How generous are you, sir?
I like Matt's number, but I'm going to go one full handle below and go 23.98.
Dang. You really want those?
We're gonna be out of zone 4 after this bet. I'm gonna go all.
You want those VIX puts to hit a 10-cent bid? That's what you want. Those June puts. Well, I'm sorry. What did you say? 23.98? Is that what you said?
23.98.
Oh, wow. All right, listeners, we already got some fire going here. 24. I thought 24.98 was interesting. 23.98. Wow. All right, so we got a lot of downside living to do here, listeners. Will that continue? We're shucking off all the earnings juice it seems like we were putting into this market. So who knows what's going on out there. So I'm going to say, we're at about a 26 and change right now, 27 and change in spikes out here right now. Ugh. I'm going to say a little bit north of where we are right now. I'm going to say 26.56. All right, that music means we have come to the end of another epic sojourn through the world of volatility. Mr. Matt, thank you for joining us here in the heart of earnings season to break down some earnings fun, earnings volatility. If folks want to learn more, they want to check out that sweet new dashboard you got cooking over there in the land of ORATs, where should they go? What should they do, sir?
Yeah, come on over to orats.com. We have the dashboard product that has analysis tools, a signal builder, 1 minute volatility is coming through. You could compare those and get signals and alerts. It's really fun. I use it my slinging. But yeah, orats.com. And of course, we have the data and everything like that. So, you'll be seeing the hats too. I mean, that's the big thing.
The hats are, I can't wait to see these hats now. I'm going to have to put aside one for me. The rest will go out to our pro listeners. And of course, one for the Umbrage King, the Rock Lobster. Mr. Umbrage King, sir, if folks want to check out what you got cooking in the land of the pit, where should they go? What should they do?
Optionpit.com, 888-TRADE-01. My SPY Master, if you want to learn to trade VIX and SPY, check it out. Doing very well. And of course, you need to have one of your guests provide me with a hat. You couldn't do it yourself. You have to bring a guy from New Hampshire, and the ORATS guy, to provide me with a hat. I'm just saying, just for the listeners.
I don't want you hearing about our pro members getting some sweet swag from ORATS and then you getting more umbrage on me. So I'm waiting till the hats come, and then we can put together the full umbrage box for the Rock Lobster. I don't want you, I hear there's hats too, and then I got to ship another box to you. It's a huge pain. So let's just make it all one box and make life easier. And then in the meantime, listeners, you want to get a dose of his umbrage in between appearances on this show, optionpit.com is the place to go. And you know where to go to learn more about all things spikes, MIAXoptions.com/spikes. And of course, if you want your week to continue after vol views, then of course, head on over to theoptionsinsider.com/pro. That's the place to go to learn more, get in on all the on-demand action, get live access to this, everything else we do. Great pro Q&As. If you're one of our newer listeners, you're signing up now for the first time, of course, you'll get access to all the great stuff we've done on that exclusive pro podcast feed. It's got a lot of great stuff. I was looking through it the other day. There's already a lot of great stuff on that feed, including we went over to the Harvard Yard virtually recently and did a nice session with the Harvard Business School alumni talking about options. That's all there for you folks to check out as well. We save you the entrance fee there. Get on over to theoptionsinsider.com/pro. Again, for all you on-demand folks, that will conclude your broadcast week. Thank you for joining us. For the rest of you pro folks, hang out for a little bit. I will be back with the Umbrage King to break down a mad week of unusual activity. Then back again next week, all the way through to Friday, another episode of Volatility Views. Stay safe out there, everybody.
Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you SPIKES volatility products. SPIKES options and futures are traded on the SPIKES Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about spikes at MIAXoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.